Dhirendra, hi afternoon. Large and mid-cap funds have put up a slightly better show versus the Sensex. What was the driver to this, and do you expect this outperformance to continue?
No, this slight outperformance is not meaningful. It is so insignificant that it should be ignored. In a volatile market which has broadly been under pressure, large and mid-cap funds matching the index performance is a great sign. So in that sense, the performance has been good, and I don't think we should derive any meaningful conclusion from this marginal outperformance of 10 basis point in 3 months time period.
Dhirendra, SBI Blue Chip is the top performing fund in the category for this period. What drives its performance, and would you recommend this fund to our viewers?
This fund shows some conviction right now, and it has done very well. It is up, little less than 1%, but once again, it is not a meaningful, outperformance in 3 months time period. And this fund surely is reflecting some opinion in its portfolio by matching some weightings of the large caps, and it's showing, unusually this fund has, is underweight on FMCG, unlike most other funds. It has almost a matching allocation to IT, which looks little unusual because everybody else, and it has almost similar allocation to matching weighting to financials, which most other funds in this category are underweight on. So in that sense, it's reflecting the manager's conviction and seems to be working. But I would say that this fund has this is too brief a period. It is a 5-6 year old fund, and it has not shown any consistency of performance. I would not recommend this fund, though in the brief period it has done well.
Dhirendra, let's start addressing queries, and our first query today has come in from Srivatsa Madhavan, and he asks if it is wise to invest in an equity diversified mutual fund through daily SIPs.
SIP is a good thing because you are averaging your investment or regularly investing in equity, and it has gained popularity. But doing it too often, I think it creates a lot of headache in terms of making sure that it's happening, looking at the accounting, looking at reconciling your statement on a daily basis. So I would say that too much of a good thing may not be a good thing. It will be a huge distraction. And also statistically, if you are investing for the long run, if you're investing for 5 years period, 10 years period, I don't think there will be any meaningful difference if you are doing it at you are doing your investments less often.
Dhirendra, second query is from Y.M. Desai. He says his question really is about at what frequency is balancing done in balanced mutual funds?
Most balanced funds actually have their predefined allocation range. So balanced fund, internally they will have some kind of assessment that it will be 65 to 70% or 70 to 75% into equity and debt. And whenever that allocation changes because the change in valuation, it can happen on a day-to-day basis. That is the job of the fund manager. But what we witness is that despite the big surge or decline in value of equity, at least on a month-on-month basis, we see that those allocations being retained, which may so it makes us think that it should be happening almost on a day-to-day basis. The fund manager should be keeping an eye on that.